Secondly, I think if you look, I talked about this at Jackson Hole last year.
Look at this. Exactly,
what you had was
a
global burst of inflation everywhere at the same time.
You see?
Largely, you got to look at and it amounted to very strong demand, stronger than we thought. I don't think we had, the forecast error was two parts. Part one was demand was just stronger than we thought.
If you don't take it out, I'm one.
We had in mind, the recovery from the global financial crisis, and instead we got this really high-powered recovery. So the other side is the supply side. The supply side was constrained. We lost 8 million workers, and it took a long time to get them back. Stuff that
yes.
That took
long.
So
NVIDIA,
and we'd never seen it before. We knew in real
time.
No,
NVIDIA and $100.
Really hard to get that.
Yeah.
Those two things, inflation globally and
malware.
Hold
on, let me
close to employment close to the natural rate, not just in the United States, but everywhere. Happenstance. Yeah, I would put down the US's outperformance to three things. And the first is just one would be structural characteristics, and that's more flexible labor market, highly developed capital markets, culture of innovation, rule of law, all the things that make this. And
I might get into a call.
Industry. Other countries are trying to do early stage financing out of banks. That's not going to work. So all of those things make us account for 40 years of productivity. That's double Europe's productivity. It increases. So that's thing one. Thing two is just population. We had a big population increase in 22 and 23. And that doesn't help with per capita, but that moves top line. And what was the third thing? Oh, productivity. So we had a really significant burst in productivity, and from a range of
buying the 275.
Where it's coming
from.
Some of those factors. This gets to your last question. Productivity will be kind of a one-time event. So people were wound up automating a lot of functions in retail.